Hello and welcome to this webcast introducing the amendments to IFRS 17 published in June 2020 by the International Accounting Standards Board. My name is Roberta Ravelli and I'm a member of the technical staff here at the ISB. With me today, Darrell Scott, a member of the ISB with a special interest in insurance. Hello, Darrell.
Hello, Roberta.
Before we get into the webcast, as always, we note that the views expressed during this webcast are those of myself and Darrell. They are not necessarily the views of the International Accounting Standards Board or the IFRS Foundation. And a copy of the slides using this presentation is available for download via the IFRS Foundation website. Let me start with the background to the amendments to IFRS 17 that the board published in June 2020. IFRS 17 is now 3 years old, and the board has always recognized that implementing IFRS 17 is challenging for many companies. So when the board issued IFRS 17 in May 2017, we committed to monitor implementation progresses and to stand ready to act to help if necessary. We made available many tools to help, such as a public forum for discussion of implementation questions, and we held many meetings with insurers, auditors, investors, and regulators to understand their experience with implementing IFRS 17. This helped the board understanding the challenges faced by companies getting ready to apply the new requirements. To further support implementation, the board decided to see whether it was possible to revise some requirements in IFRS 17 to ease implementation. 1 year ago, in June 2019, the board published for public consultation some proposed amendments to IFRS 17 that were welcomed by respondents. So the board decided to go ahead with the amendments. We have now completed the process of amending IFRS 17. To allow time for the adoption of the amended IFRS 17 by jurisdictions around the world, the board decided to defer the effective date of IFRS 17 by 2 years to annual reporting periods beginning on or after 1st January 2023. Company can apply IFRS 17 before that date if they wish. The board also decided to continue to enable some insurers to first apply IFRS 17 and IFRS 9 at the same time by extending the possibility for some insurers to defer the application of IFRS 9. This is permitted by IFRS 4, so this extension represents an amendment to IFRS 4. So from annual reporting periods beginning on or after 1st January 2023, companies are required to apply IFRS 17 and insurers can no longer use the exemption from applying IFRS 9. Darrell, can you please tell us more about the objectives of the amendments and what these amendments mean in practice?
Sure, Roberta. As you mentioned, the amendments are intended to help companies implementing the new requirements in IFRS 17. Now, although these amendments are actually narrow in scope and targeted to very specific areas of the standard, they do address many of the concerns and challenges that were raised with us, and they do provide meaningful support to companies. In practice, we've been told that they will reduce costs and they will make the results of applying IFRS 17 easier to explain. And of course, they'll also help in easing the transition that companies have to go through as they start applying the new standard for the first time. These amendments achieve those outcomes without unduly disrupting implementation processes that are already underway and that have been underway, as you mentioned, during the last 3 years. I think this is really important because not disrupting implementation was one of the criteria we set when we started the process of considering possible amendments to the standard around the end of 2018. And I guess it's useful at this point to step back and remind ourselves of what those original criteria were. So as the ISB, we go into a process like this very aware that amending any standard before it's effective carries a significant risk of disrupting implementation and of increasing costs for companies rather than decreasing them, as is our objective. And so as we went through this process, we need to guard against that effect happening. But at the same time, and perhaps to a certain extent balancing that, it is also important that any amendments don't result in a significant loss of useful information for investors compared with the information they would have got applying IFRS 17 as it was when it was originally issued. And so that means, for example, the amendments don't create inconsistencies with IFRS 17 or with other IFRSs. We know that one or two of the amendments may actually add some complexity to IFRS 17, but on balance and considering the feedback we got from our stakeholders, the board concluded that the added complexity was justified, given how strong the stakeholder support was for the information that will result from the companies applying these amendments. So where did we land after all of this? The fact that the amendments do not result in a significant loss of useful information for investors is important, and it means that the amendments do not affect or detract from any of the improvements that were introduced by the standard. And also that they don't change the fundamental principles that are inherent in IFRS 17. So just as a reminder of those principles, IFRS 17 is the first comprehensive and truly international IFRS standard for insurance contracts. When implemented, IFRS 17 will provide updated information about the rights, the obligations, the risks, and the performance that arises from entering into insurance or issuing insurance contracts. It will increase transparency in financial information reported by insurance companies. And in addition, and perhaps very importantly, it introduces a consistent and comparable accounting model for all insurance contracts based on a current measurement approach. Today, there's no single approach to account for insurance contracts. And so companies in one jurisdiction may account for insurance contracts differently from companies in other jurisdictions. And in fact, one company may even account for its own insurance contracts in several different ways, depending on where that contract has been originated. So IFRS 17 is a necessary fix for all of the adequacies that exist in the current accounting approaches. So Roberta, with all of that as background, do you want to talk a little bit about how many amendments to IFRS 17 we actually finalized as part of this process?
Yes, sure. I think that the board has done as much as possible to help companies, probably more than what it was expected at the beginning of the process of amending IFRS 17. The amendments are targeted to specific areas of IFRS 17, and they are not necessarily linked between them. But I think that the best way to introduce the amendments is to group them by the objective that UW just mentioned. So a first group of amendments aims to reduce cost. The board reached this objective by simplifying some of the requirements. For example, by excluding some insurance contracts from the scope of IFRS 17, so that some companies will not incur cost to implement IFRS 17 for those contracts. A second group of amendments aims to make results easier to explain for companies. The board reached this objective by revising some requirements generating results difficult to explain in some circumstances. For example, by requiring the allocation of part of acquisition cost to expected contract renewals, so that a company will not present loss-making contracts when it expects to recover the acquisition cost from renewals in the future. And a third group of amendments aims to ease transition. The board reached this objective by adding further simplifications to the transition requirements and also by extending the implementation period by 2 years, mainly for the benefit of small insurers. So we are not going into the details of each amendment in this webcast, but more information is included in a document called Project Summary and Feedback Statement. The document is accessible to all for free on the IFRS Foundation website. It includes two sections. The first section is the project summary, which provides an overview of each amendment to IFRS 17. The second section is the feedback statement, which summarizes the significant matters raised in public consultation on the proposed amendments to IFRS 17 and how the board responded. There are other materials available on the IFRS Foundation website. The booklets of the amendment to IFRS 17 and of the amendments to IFRS 4 are available to subscribers on eIFRS. So let's talk about the content of each booklet in the next couple of slides. The booklet of the amendments to IFRS 17 includes the amendments to the requirement in IFRS 17 finalized in June 2020. It also includes the new paragraphs to be added to the basis for conclusions on IFRS 17, which analyze the considerations of the board when developing these amendments. The document also includes the amendments to the illustrative examples, and particularly the illustrative example developed to illustrate the amended accounting for reinsurance contract held. And finally, the document includes the amendments to other IFRS standards made as a consequence of the amendments to IFRS 17. For example, the amendments to IFRS 9 to permit companies to apply IFRS 9 to some loans that meet the definition of an insurance contract. And a separate booklet includes the amendments to IFRS 4 relating to the extension of the expiry date for the temporary exemption from applying IFRS 9. As well as the new paragraphs to be added to the basis for conclusions on IFRS 4, which discuss the board's rationale for this extension. So, Darrell, what will happen next?
So the amendments immediately become a part of IFRS 17, and so they'll become effective at the same time as the standard does. So companies need to start focusing right now on completing implementation of the whole standard incorporating these amendments. From our perspective, we as an organization will be continuing to support implementation. The appendix to the slide deck that we're using for this presentation recaps some of the material that's already available on the IFRS Foundation website. But of course, that material is about the requirements in IFRS 17 as originally issued, and doesn't reflect the effect of these amendments. We know, and we're very aware from the feedback that we've received, though, that this material has proven to be very helpful for many stakeholders in explaining the key requirements of IFRS 17. And so as a consequence, we're not planning to withdraw the material from our website. We think it will continue to be helpful, particularly for those that are at a less advanced stage of implementation. And I think it's also worth noting and perhaps remembering that only a limited amount of the educational materials are actually affected by the amendments that we've made. That said, our next step is to make available additional educational material. And our idea around that is that this new material will follow the order of the material that's already available, so that it is easier for our stakeholders to understand how to read and use the whole body of the educational resources that we're providing. We've also got a little bit of standard setting left. We are going to propose updates to the IFRS taxonomy, reflecting all of the amendments that we've just been talking about. The taxonomy facilitates electronic reporting of financial standards prepared applying IFRS standards. And so obviously it's important that the taxonomy is aligned with the final IFRS 17 standard as we've issued it. And with that, Roberta, we've come to the end of this webcast. I'd like to thank everybody for listening and for being with us on this journey through the amendments process. Your feedback, your comment letters, and your ongoing interaction have been invaluable to us in developing and finalizing these amendments, as it was when we did the original development of IFRS 17. And so I'd like to also take the opportunity to thank you for that. And I guess with that, it's only left for us to wish you a successful implementation of IFRS 17. Thank you.